It's Tuesday, the 25th of January 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael Thompson.
Sean, before we kick off, just a very quick reminder that on Thursday, the regular episodes of Fear and Greed will be resuming. So that's our full-length episodes every day, all the normal interviews, the afternoon market report, all of it. So that's this Thursday, don't forget. But in the meantime, Sean, let's cover today's top 5 stories in 5 minutes. Here we go with story number 1. Markets, Sean, are very skittish at the moment, and there's not much confidence among investors.
That's right, Michael. The ASX ended yesterday down another 0.5%. Investors are really worried about global growth slowing as the US Federal Reserve lifts interest rates in coming months to keep a lid on inflation. Of course, there's also COVID worries and plenty of geopolitical tensions. It's led to plenty of big moves on the local market. Regis Resources tumbled as much as 18% yesterday after it cut its production guidance due to an 800-tonne rockfall in one of its main pits. Retailer Adairs dropped nearly 22% after it said higher costs were denting profits. In contrast, wireless broadband provider Unity, its share price jumped 13% after it said it had received multiple takeover offers. Now, some of the commodity markets at the moment are pretty strong, and that's all on the back of these geopolitical tensions. Oil prices are up 14% this year so far and around 7-year highs. Iron ore prices are back above $130 a tonne. Gold is trading around $1,840 an ounce. Tin, nickel, palladium, they've all done really well so far this year. Now, Michael, I think it's pretty typical of what we're going to talk a lot about in the next few months. The buzzword for financial markets will be volatility. Plenty of it coming.
Yeah, absolutely. Now, story number 2 today, Sean. The housing market certainly cooled late last year. What happened over the Christmas break and what's going to happen this year?
Certainly the past 4 weeks have been sluggish for the market, but that's pretty typical for this time of year. Auction clearance rates nationally over the weekend were around 69%. Now, that's not bad in terms of the long-run average, but of course it looks pretty weak relative to the incredible 2021. In fact, the auction clearance rate the same week last year was 80%. For all of last year, prices rose across the nation on average by 24.5%. Now, that was led by Brisbane, Sydney and Hobart. So far, what we've seen this year is plenty of houses up for auction. According to CoreLogic, 448 houses were up for sale last weekend. Now, that's almost twice as many as the same weekend last year. Might be a fear of missing out from sellers or concerns about rising interest rates later in the year, which will further hamper affordability. But it's just not a bad time to be looking for a house at the moment. Now, market watchers are still forecasting 5 to 7% growth for the market this year. But if interest rates rise faster than expected, and it's a real possibility, that might be a little optimistic.
Yeah, it could be. Now, story number 3 today. It's a big few days, Sean, for Sydney Airport with the shareholder vote on whether to accept the $23.6 billion offer from a bunch of super funds just a week away.
Yes, remember this was the second biggest takeover offer of last year behind Square's offer for Afterpay. A consortium led by IFM investors and global infrastructure partners have offered $8.75 a share for the airport. There are plenty of investors annoyed that Sydney Airport didn't fight harder for a higher price. Remember, this is a monopoly asset, at least for the moment, and everyone agrees flights in and out of Australia's main gateway will increase over time. It also means the airport can set prices when things do pick up. Critics of the deal argue the share price was artificially depressed ahead of the offer because of the virus, and really the board shouldn't have accepted the bid. But COVID just keeps going on and on and on. Few industries were hit harder by the pandemic than travel. Just how long it will take Sydney Airport to recover to pre-pandemic volumes is the big unknown. There's little doubt that without the bid, Sydney Airport's share price would be much, much lower. In fact, over the past year, its share price is up 47%. That's the 25th best performer on the ASX 200, and that's because of the bid. The odds are the takeover will get shareholder approval, but it's going to be a nervous few days for many, many investors.
Now, Sean, speaking of COVID, that story number 4 today is all about the virus and what appears to be a little bit of good news.
Yes, there's still plenty of cases each day and too many deaths. There are about 15,000 recorded cases in New South Wales yesterday, 12,000 in Victoria, 10,000 in Queensland, but the numbers appear to have peaked. Hospitalisation rates are falling. That's the best news, though it's less clear whether intensive care admissions have yet peaked. Now, as schools head back, chief health officers have warned there will be a jump in cases across the country. Meanwhile, Federal Health Minister Greg Hunt said 16 million rapid antigen tests will be delivered in the next few weeks and another 33 million next month. Also, the Novavax vaccine against COVID has been given the green light.
And finally, Sean, story number 5, really interesting one, this one. Fortescue has spent more than $300 million buying a company better known for its work in Formula One than mining.
That's right. Fortescue Future Industries, a subsidiary of Fortescue, is focused on developing clean energy. It will pay about $311 million for Williams Advanced Engineering to help ramp up its expertise in development of batteries, including for electric trains and mining haul trucks. Now, Williams Advanced Engineering is an offshoot of the Williams F1 team. It already provides batteries for some World Championship cars in the Formula E category. For Fortescue and its founder, Andrew Forrest, it's all about reducing the company's carbon footprint. Really interesting purchase.
Yeah, it certainly is. That's it. The top 5 business stories in 5 minutes. Thank you very much, Sean.
Thanks, Michael.
It's Tuesday, the 25th of January, 2022. Remember, full-length episodes and interviews all back from Thursday, so make sure you're following the podcast and join us online as well on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.